Hey guys, what's going on? My name is James Mason. In this video, I want to explain to you what is VWAP and how to use it in your trades. So let me get rid of this camera. Alright, so VWAP. VWAP stands for Volume Weighted Average Price. Now, what I have open right here is, ticker NKE, Nike, and it's just candlesticks. So you can integrate this indicator into any of your charts to use, for your trades. It actually works very well with EMAs and whatnot, but I do advise, like, if you are going to use EMAs with it, just delete the upper and lower bands, and I'll show you how to do that here in a second. So right here, just candlesticks. So go up here to studies, click on studies, edit studies, and I have nothing right now. So I'm going to type in VWAP. Click on it, add. I'm just going to go in here and show you this real quick. I explained this in another video, but for those of you who didn't watch that video and just skipped ahead or just came to this video just by chance or whatever, however it was, click on that. Now, this is the standard default. Keep that the same. Now for here, what I like to do is, actually I'll just keep it default for a second, then I'm going to go back in and change it to show you guys. So that's the color of your upper band, and this is the color of your lower band. Now, like I was saying a second ago, if you have EMA lines running with this, it kind of makes it a little bit confusing when you start having so many EMA lines. I run like 4 EMA lines at times, and if I had these upper and lower bands always running in all of my trades on top of 4 EMA lines or whatever it is that I'm doing, it would be just so chaotic. So what a lot of people do is when they want to get rid of one of these upper or lower bands, they just click that right there. They'll do it for both. So we can go ahead and just click OK, and then I'm going to come back in here in a second. So here I am, click apply, OK. So this is what VWAP or VWAP looks like. Now here's the lower band, and this is the upper band. With me, I like to change this middle one because that color is pretty similar to that color, and also I have other EMA lines that kind of look like that as well, and I don't need to be making decisions off of a line and I mistake it for something else. So I'm going to go back up here to studies, edit, and I like to put the dash line. That way it just looks different than the rest of my EMA lines. And because I don't have any other lines that are white, that's kind of the best color for me to use. So click apply, OK. So now, since I changed that, this is what it looks like. So, as when you are looking at VWAP, this dash line right here, this is the average price for each share that is owned by investors. Now, when you have a candlestick that goes up like this, this is what you call a rip out. And when you have a rip out, you'll see the candlestick, it will push up, and it will, a lot of times it will break past this upper band. Now, when it does that, if you're looking at your VWAP indicator and say you buy in right here thinking that, you know, oh, this is such a good run, this is going to keep on going, chances are you're wrong. Because, you know, this might go up a little bit more, but there's a good chance, just, you know, depending on, you know, what has happened in that stock that you're trading. You know, you have to take everything into consideration. But if this is just, you know, how the stock is trading that day, if you buy in high right here, this thing is more than likely going to start pushing back down to this average. So with that said, anytime you see candlesticks that push up above this average line right here, that is a bullish run, which is an uptrend, as you can see right there as well. And right here, when it breaks the plane of this average and then goes below it, that is what you call a bearish run. So you can see right there, and then over here as well, it takes a strong bearish run, and it actually breaks past that lower band. But then, you know, just like how I said up here, once it breaks past that upper band, you can kind of, I wouldn't say expect, but assume. Now, we all know the definition, or what the slang definition for assume is. But a lot of times, it usually comes back or near this average line right here. So, does it have to come back every time? Absolutely not. But what I mean by that is, as you see right here, it breaks past that lower band. And if you was able to get in at this point, you know, you would have had a good run if you would have, you know, hit this just right. So right there, that is, let's see, 45-cent difference. Now, obviously it would come into play with how many shares you own for this price of the stock. But anyways, you know, it is kind of hard to hit, you know, things like this, because if you're just looking for these big dips like that, you know, thinking that you're just gonna, you know, to hit this bottom and then ride it up, it might work out a good bit of times, but there will be that one time that, you know, it rips through this bottom band, and there had been like some news or something that you didn't either read or, you know, you had no idea about as to why it is doing this, and you might buy in right here and this thing just keeps free falling. So if we go back and talk about if it has to actually go back up to this average right here, you know, again, it does not have to. This is just the average for the shares that are already owned. So for the people that actually meet this average, or roughly this range right here, at this point, they're red for their trade. And obviously, this point over here, they're green. So if you was able to get in, you know, somewhere right here, if you just had a good dip in this stock and nothing crazy was actually happening, and you got in, would you expect it to break past across that average and go up here? Honestly, I wouldn't. Because usually when it starts breaking past this average line, it usually stays within, this set of bands. Same for right here. If it's actually uptrending, a lot of times this average line right here will become either a support or a resistance. So, you can kind of see how, how this one moves with the candlesticks and everything, and it breaks past right here. So this is, in a sense, kind of like a support. Even though it does break past right here, it's still just kind of riding that lower band. And then it just kind of, hangs out in the middle for the rest of the day. But still, that's still a downtrend, because right here, at the end of the day, from those points, that is minus 29 cents. One thing to remember with stocks, it is easier for the price of a stock to drop than to go up. And with that said, if you are in a position back here to where it breaks across this average right here, and you see it consolidating, it's so if you're looking at this, as this breaks past this average, you can kind of see where that price is bouncing at this moment. Now later on, will this matter? Probably not. So with this being a 5-minute chart, it's bouncing. You have 5 minutes to where it's kind of bouncing right there, right there, right there. And that does give a little bit of confidence as to how this may move. So as you're watching this and looking at other indicators to help you decide if you want to make this trade or not, if you decided to get into there at that point, when it actually started going up and then broke that average again, by the time it started approaching this upper band, that's when you need to start considering to lock in your profits. Even if it would break past this upper band a little bit, do not have regret that you did not hit it at the top. Because if you always try to hit it either at the bottoms or the tops, you're going to pass up opportunities. So you need to consider to start locking in your profits as it gets to this upper band, because it's not going to stay near that upper band for too long. It's going to want to start moving right back down to the average. And once it moves past that average, and just depending on how it plays out throughout the rest of the day, it could break through at this point and then just, tank. Just completely just lose it, like right in here, for whatever reason that happened. So let me get rid of these lines real quick. Alright, let's change the time frame, and it will paint a completely different picture. So this is the 1-minute chart. Now, as you look at this, it rips up at the opening of the day. It comes up here and it hits this upper band. It rides up it for a few minutes, and then it kind of starts trying to sell off a little bit, and then it comes back up. And basically what's happening right here is, you know, these are people thinking that they're getting a good price right now. They're getting just a good deal, that it had pulled back. This is going to keep going up. And the thing is, they are completely wrong. Because look at how much distance is between this average line and those candlesticks. That's a huge difference. So, you know, these people thought that they, you know, was getting an awesome deal. They bought it, it ran up, and then it just drops. It breaks through, you know, the average line. And, you know, this could be just the point where they was just, you know, thinking like, oh, you know, I'm upside down already. I'm just going to cut my losses soon. And so that probably helped out with, you know, with this downtrend. Well, it comes through here, and it obviously starts dancing around. And then, you know, it kind of started wanting to act like a little support right there. But, you know, at that moment, yes, a support, but, you know, not for long, because, you know, it goes back down here. And then now it's wanting to act like a resistance at this point. Well, then it drops again, and then it goes back up. And so, as you can see, when it actually starts approaching these bands, that's either when, you know, if it approaches to the upper band, that's either when it, you know, starts to sell off again, and or, you know, hold on, I'll get to that point in a second. So sells off again, and that's why I was saying a minute ago, if you buy in and as it approaches the upper band, go ahead and start considering to lock in your profits. Now, with this lower band, as it comes down here and, you know, it hits this, and whatever happened at this point where it just had this major sell-off, right here you kind of see it, you know, it kind of consolidates on the 1 minute chart, and then it comes back up, and then it comes back down, and right here, you know, that's showing a support. It's bouncing off this lower band. So if I saw it at that point, honestly, I would probably consider to, you know, buying right here. And I only say that just because I'm looking at this indicator just solely by itself. If I was truly trading this, I would be taking into consideration multiple indicators. So let's just say I bought in right here, and let's see. So from there, and let's just assume that my other indicators were not telling me anything different. And let's just say I sold right there. That is, you know, that's a gain of 29 cents. So why would I sell it right there instead of, you know, just trying to wait for it to break across this and go up here? Well, because this line is more likely going to act like a resistance. Every time you have any kind of lines up, whether it's EMA, you know, VWAP, or whatever it is, when they start, you know, consolidating on these lines, the next line above it will act either like a support, well, above it would act like a resistance, below it would act like a support. So, as you use VWAP with your trading, just remember, you know, depending on where your buy-in point at, if your buy-in point is down here, then your sell target is going to be somewhere up around here below this line. Again, do not try to hit home runs and hope for it to go up here. 9 out of 10 times, it is not going to happen. Now, for up here, if you see this consolidating and bouncing, bouncing off of this average line, somewhere, wherever you would decide in whatever stock you're trading. Let me look back here real quick. Okay. Whatever stock you're trading, you will just have to watch this. And as the day goes on, if you see, any of these lines acting like a support or a resistance, that's when you start deciding, when you're going to make your entry point and your exit. So, let's just say all day long that it has been bouncing off of this average line right here, and I saw it continuously. I would end up, buying it right here, and I would hope to sell it, somewhere up closer toward this upper band. But as it started, going up and getting closer to the upper band, that's when I will be ready to sell off. So that is VWAP, and I hope you guys understand that a little bit better. So if you could, if you like this video, please subscribe to my channel. Please give me a thumbs up and share this with people, and I will see you in the next one. Thank you.